Marrie Diaz, one of your enriched mortgage ladies. I'm here to talk to you about payout penalties. So what is a payout penalty? If you have a mortgage, every mortgage is attached to a payout penalty. So basically, if you sign on a 5-year term to pay off a mortgage and you opt out of getting out of the term in 3.5 years, then you have to pay off the difference. And so usually, what is that difference? That difference is going to have 3 aspects. There's 3 options that you're going to have to look out for. And every mortgage is going to be different. The first one is going to be the 3-month interest. So you might have to pay 3 months interest. Some other mortgages will have what they call IRD. IRD stands for interest rate differential. And so the interest rate differential is dependent upon the interest rate, what the bank currently has or posted, or possibly the discount rate, depending on the bank, minus the contract rate that you signed up for, times the number of years you have left, times also the remaining balance you have on the mortgage. So let's just make, for example, you have a $400,000 loan. And you have a 5-year term, you have 3.5 years, you want to get out of it, so you have a 1.5 years left. The interest differential will say, okay, now that's our current rate. Our current rate is 4%. This is the posted rate. So we're going to use that and we're going to subtract your contract rate. Maybe you signed up for a 2.5%, so the difference is 1.5%. Then you're going to have to multiply that by the remaining balance of your mortgage and times the number of years that you have left. That's going to be quite significant. And you're going to see most mortgage terms is going to say either interest rate differential or 3 months interest, whichever is higher. So be aware of that. And also, the third thing you have to be aware of is the 3% administration penalty cost. So this is usually associated with the low interest rates that you sign up for because you wanted the best rate at that time. That's why best rate is not always the best, because getting out of it is going to cost you a lot. So can you imagine 3% of a $400,000 mortgage? And that has to come out of your pocket. It can't come from anywhere else. So be prepared when you're dealing with payout penalties, and when you're signing for a mortgage, we're here to advise you, give you the best options possible and what really suits your needs at that time and for your future goals as well. So ask us anything about mortgages, especially your payout penalties, before you sign on the dotted line. We're here to help.